Welcome back, everybody. Another DeFi Raiders AMA. My name is Relentless. Today we'll be talking to Simply DeFi and Komets from FX Protocol, a new kind of unique volatility-based stablecoin launching on Optimism. So thanks, guys. I appreciate you joining and look forward to the conversation.
Sure. Happy to be here. Thanks for having us.
Yeah, absolutely. You guys want to go ahead and give an introduction about yourself, kind of how you got onto the team, how it all started, kind of thing?
Sure thing. You want to go first, Subli?
Yeah, Ali. Okay. I take the shot for this one. Well, thanks for having us. Just as a quick correction, FX Protocol is launched on Ethereum mainnet. I think everybody knows me as an Optimism ambassador, but today I changed my hat, and I'm a core contributor to Aladdin DAO. And so FX Protocol is going to launch on Ethereum mainnet very soon. So basically, how did it start? It started. I started trading on Binance in May 2021, getting wrecked after 3 months, and starting doing some fundamental analysis on project, filing DeFi, digging the rabbit hole, and joining Discord channel of few teams members, few teams, and one of the project was Aladdin DAO. I joined the community when Concentrator was launching, so that was summer last year, 1 year ago. And basically, the more I was digging into the project and the more I was exchanging and participating in the community, the more I was involved on that. So with Kmet and with two other friends, Crypto Prophet and DeFi Advisor, we created a marketing arm of Aladdin DAO called the A Team, and providing basically all information, kind of, promoting facts about Aladdin DAO project, because most of the team are, let's say, big brains, and but they could lack some, let's say, communication time to communicate properly on the project at a larger scale. So we create this group of 4 people. And since I think now 2 or 3 months, I was invited to join Aladdin DAO as a core contributor. I'm now taking care of the DAO to DAO communication, since I have a deep connection in DeFi on overall. That's it, Kmet, if you want to give a shot.
Yeah, absolutely. Can you guys hear me okay?
Yeah, perfect.
Good. So my name's Kmet. My story kind of follows Subli's very similarly. I got involved in crypto in very early 2021, and I did all the standard, BTC, ETH, and then, a couple of other coins that, I look back on with some embarrassment now, but they're all doing okay now, I guess, today, thanks to all the big news. But in about November that year, I started getting into DeFi. I really wanted to, kind of find out more about all these coins with all these weird letters like VECRV and CVXCRV, and kind of figure all those out. And once I started going down that path and started learning more about how the Curve ecosystem worked, I was completely hooked. Totally chilled myself on it, and went full throttle into DeFi and learning everything I could about all the protocols that were available and the various L2s, and how to generate yield and lending and borrowing and all that stuff. And then slowly but surely, once you start going down the rabbit hole, you start finding these projects that I've come up with some very innovative ways of addressing things like liquidity or borrowing and lending, and especially once you're kind of like circulating around things like the Curve ecosystem, it's a very small world, and it led me to Aladdin, and mainly just because I just found the core team and everybody that was associated with it to just be super nice and very helpful and extremely intelligent. And so, you can't help but just, fall in love with a community like that. And so I just started hanging out there all the time, and bumped into Subli and, a few other folks. We started having some regular, Twitter spaces, and that turned into the A Team. And so now we're the in-house sort of media arm, that handles all sorts of media requests and things like that for Aladdin DAO. And then like Subli about a month and a half ago, became a core contributor, actually working with the team directly to help build and expand the Aladdin DAO ecosystem with their latest product, FVEX protocol. So very excited to be here with you guys and talk about that today, and make sure everybody walks away with a good understanding of this groundbreaking protocol that Aladdin has created.
Yeah, very cool, very cool. Yeah, excited to dig into it. Awesome how far you've gotten, by the way, and just a short period of time, really. I only got into DeFi kind of the beginning of 22, and it's kind of crazy how things evolve and where you end up. So congrats on that. So that's awesome.
Thank you.
Yeah. All right. Well, cool. So you guys want to go ahead and kind of give a generalized overview of the protocol, and then we'll kind of dig into each of the different tokens within it and kind of how everything works.
Sure.
Kemet, go ahead.
Oh, I was good.
You must write. You must have this, definitely.
I was going to have you do the generalized overview, and I was going to get into the nuts and bolts. How does that sound?
Yeah. Okay. Perfect. Yeah. So basically, the genesis of this project was there are two things. The first one was stablecoin DPEG. We face since a couple of years some black swan events on stablecoin. So whether it is USDT, then it is USDC, and we got back. I think that was when 2021 or 2022 the Luna crash. I think it was early 2022. We got a UST that went to zero. So the main idea is that if you want to have a leveraged position by depositing your blue chip assets, being ETH or BTC, and you want to mint stablecoin to do whatever DeFi allows you to do, the main problem is that you can't rely on a centralized stablecoin, first of all, because you have this risk of black swan events because they can be frozen by any government, and there is a kind of censorship because, Circle or Tether can be locked down at any moment. If you followed the story of multi-chain bridge on Phantom, there was $100 million who, let's say, blew up in the air, and we don't know what happened. But 1 month ago, the team was arrested. I think it was in China. So what could happen, and probably that will be the story, is that the Chinese government just got maybe a hand on the private key of multi-chain and took all the money out. So that's the main problem, let's say, of censorship. The second thing is that if you want to remove that risk, you can use decentralized stablecoin. But here, you have a kind of limitation of scaling. Liquidity, for example, with their LUSD is doing a massive job, but it's still $100 million market cap compared to, maybe 50 or 60 billion market cap of centralized stablecoin. So there's a lot of things to do, and there is a kind of limitation. So basically, the team, Aladdin DAO, took a step back and decided, okay, what is the best way to leverage a position by depositing your ETH for the coming, not for the coming year, and for surfing on the ongoing narrative, which is decentralized stablecoin, but in the coming 10 years. And this is the idea of the FX protocol, where you can deposit. So KMH is going to explain a little bit more and better than me. So you will be able to deposit staked ETH, and you will be able to mint two kinds of assets. The first one is what we call a stablecoin indexed to ETH. So this stablecoin takes only 10% of the volatility of ETH. It's called FETH, meaning that if Ethereum asset is increasing by 10%, FETH is only increasing by 1%. But you understand that this volatility, something needs to take it out from the stablecoin. So this is the second asset that anyone can mint. It's called XETH, and it's basically a leverage long position on ETH with zero funding cost. And for traders who are listening to us, or people who know how perps exchanges are working, you know that funding rate is basically kind of fees based on the balance, on the skew of the market, so on the balance between short and long. And you can't, I mean, not you can't, but it's very costly to keep a position open, especially a leverage position open for a couple of weeks, months, or even a year, because you can pay 100% of your notional volume as funding rate. So XETH is a leverage long position at zero cost, at zero funding rate, which is something that doesn't exist. So an FETH is the only deflationary stable asset. If you look on the ultrasound money, I don't remember the website, but there is a website, I think it's ultrasoundmoney.com, something like that. You can see the amount of the curve, the inflation curve of ETH. And since the merge, basically it's going down, meaning that ETH is now a deflationary asset, and it's one of the biggest, let's say, market cap, the second market cap in crypto, and it's deflationary, which means that if you make the equation between, let's say, scarcity and demand, the asset will tend to, let's say, move up in price for the coming years. So if you want to be exposed for the coming 10 years on Ethereum, instead of putting that on the wallet, DeFi allows you to mint a stable asset where the underlying asset is going up. So your stable asset, even if it takes only 10% of the volatility, it will go up slightly. Whereas on the other side, USD currency is going down in terms of monetary value because it's deflationary, it's losing power, and we see that on the DXY price action. We can see that on the macro fundamental news with the BRICS, who are, let's say, trying to get rid of USD. And I saw a news, I think this week, they want to mint a stable coin indexed to gold instead of using USD for their exchanges. So there are a lot of macroeconomics where USD is not the primary currency for trading now. And Adin DAO created this FX protocol where you can do that. So this is basically the introduction and genesis of FX.
Man, that was awesome, Subli. I am sold. I think I think I might get into this protocol.
Thanks, Kevin.
Yeah, that was a solid overview.
Yeah, so if you don't mind, I'll just kind of piggyback on that just a little bit. So,
Absolutely.
Yeah, so just to get back to kind of what Subli was saying originally about sort of the decentralized nature versus centralized nature of stable coins. So for Aladdin, the impetus of sort of all of this centers around the March 13th depeg of USDC, right? And it kind of blowing up and going down to 88 cents. It's pegged it, and so our DAO, like every other DAO that has to pay contributors, operates in stables, and USDC was one of them. It was like, oh crud, man, like 88 cents. Like, what is going to happen? And fortunately, that Monday, basically the deposits were guaranteed by the federal government for Silicon Valley Bank. And so I believe that was the bank that USDC was using, Circle was using. And so everything was like, okay, well, that was fine, but we're going to be made whole here, I think. But the race is on now to basically figure out, okay, what's the next best alternative? And the answer was, there's not a whole lot out there that's like completely decentralized in terms of minimal centralized exposure. The best example was Liquity's LUSD, and because it did very well in that, and it's collateralized completely by ETH, and so the main problem with utilizing LUSD is it's expensive to mint. You have to open up a collateralized debt position, and you have to manage it. You have to watch it. You have to make sure that your collateralization ratio is such that you're not going to get liquidated. Additionally, you have to collateralize above and beyond the minimum amount. So, you might be spending 170% to mint some amount of stablecoins. So the opportunity was there, and our founder, Charlene Wu, who is probably one of the most brilliant human beings you'll ever meet, and just delightful, basically came up with the idea along with the rest of the team to basically be like, well, what if we took ETH and split it into these two tokens? One of them just kind of moves very slightly, and the other one basically absorbs all the rest of the movement of ETH's price movement. And so that's where you get the two tokens, FETH and XETH. And so just for shorthand for folks that are like, well, how do I remember which one's which? I always say like XETH is like excitable ETH, that it's, it can jump around a whole bunch, and, hopefully FETH is just kind of like, fat and lazy and just kind of sits there. So that's sort of my, ELI 5 on sort of FETH and XETH. And we can kind of dive into sort of how the protocol operates and whatnot, but happy to take any additional questions that you might have.
Yeah, no, let's do that. Let's get into kind of, how they work together, and then we'll, break down the protocol, and then we'll move over to, as we talked about earlier, kind of the mechanics of like stability and all that stuff as well.
Yeah, we can sort of do that. And Subli, feel free to jump in if I missed something or whatever. I'll kind of dive into the mechanics of basically how the protocol works. But essentially, it's really pretty simple. You, as a user, you basically will go in, and our testnet is live right now. You can go to our website, fx.aladdin.club, I believe is the address, and you can participate in our testnet, which is live. But essentially, you can go with either native ETH or staked ETH, Lido staked ETH, and you can take that amount and you can mint either FETH or XETH or both, depending on how you want to split it up. And so by minting, you can basically think of the entire protocol as like one giant collateralized debt position. And the collateral is the LSD, the staked ETH, and then the what's borrowed is the FETH, and then sort of the XETH is the if you want to look at it in terms of a giant mortgage, your LSD reserve is basically the price of the house, is the home value, and then your FETH is basically your mortgage, and then on top of that, your XETH is your equity in that. And so your equity can always fluctuate, but your mortgage never really changes, and so, but your home value can change. And so that's probably the easiest way. That's how I like to explain it, so that people who aren't familiar with it kind of have an understanding of it. But it's basically a giant CDP. And so you can mint either FETH or XETH, and by minting FETH, you get the whatever amount your staked ETH was. The fees are very minimal for minting and redeeming, and so you can always go back the other way with your FETH or your XETH through the protocol. And so the protocol itself actually does not make a tremendous amount of money through the minting or redeeming. Essentially, the main source of income for the protocol is through these LSD staked yields. And so these LSDs, the staked ETH that goes into the reserve, the yields from it basically go into what's called a rebalancing pool. And a portion of it will also go to VEFX token holders. But these yields go to this rebalancing pool where people can take their FETH tokens, the stablecoin token, and they can stake them in this pool and basically earn staked ETH yield, just straight up. And so and that yield is generated from the LSD reserve for both FETH and XETH. So, just FETH can sit there in this rebalancing pool and get that yield. And so it's kind of very unique. It's single-sided, and so people, there's not a lot of other opportunities to just single-sided stake a stablecoin and earn staked ETH. So that makes it extremely unique in DeFi. Our anticipation, from the team side is basically to incentivize it enough such that basically about 50% of all FETH that gets minted winds up in the rebalancing pool. and can earn, a decent amount of yield in these staked ETH. And so we'll be interested to see how that works out. And then for minting XETH, like Stubbley was saying, this is sort of our you could call it like a trader product, but it's basically for someone that's bullish ETH and wants to hang on to basically a perpetual long position, but doesn't want to pay any funding costs. I mean, you can basically buy XETH and then just throw it in your cold storage. And if you're bullish, the ETH is going to be, some multiple of its price now, 5 years from now, you just leave it there and you don't have to do anything or touch it or whatever. And it will basically, its leverage fluctuates based on how much FETH has been minted versus the reserve. And so the fewer the amount of XETH minted versus FETH, the higher the leverage. And once that leverage reaches a certain point, which is a collateralization ratio of 130%, or for XETH, the leverage of about 4%, we start kicking into these like sort of stability modes for the protocol. And this basically is an opportunity to basically ensure that the solvency of the system and that FETH does not get exposed to the price movements of ETH, because XETH always sort of acts as like, I use the analogy of like an M&M candy. So like the XETH acts like the hard candy shell around the chocolate center, so it doesn't melt or get damaged or anything. And so you can think of FX protocol like that a lot as well. So I'll take a moment just to kind of like answer any questions or catch up or see if there's anything else that we need to address right now.
No, I mean, that makes total sense. I like the idea of just, staking one token and being able to earn the staked ETH. You've seen a couple different projects that are doing the stable coins based off ETH volatility, right? Take Dyad, for example, right? But that's a lot more active management. Although I love the protocol, it's a lot more active management than just, kind of single staking and earning. So that's pretty cool. And then I do have a couple questions just with the XETH and the position here. One, how high is it leveraged?
Yeah, so it varies. I mean, it varies depending on the amount of FETH that's been minted. So it can range anywhere from one, depending on, if there's a tremendous amount of XETH minted versus FETH. So it would just move in line with the LSD price movement of ETH, and that would have to be like a tremendous amount. But essentially our intention, for basically a safe, operating range would be probably somewhere in the range of like 1.5 to 2 would be realistic expectations. And like we said, once it gets above about 4x, then sort of our stability modules kick in to, ensure the protocol, is taking care of that FETH.
Nice. Okay. And then what platform are you guys leveraging through?
It's just through FFX. So like because XETH is absorbing the price movements that FETH is not taking on, XETH is basically this high beta token itself. So it's absorbing the remainder of the price movements of ETH. So there's no leverage that has to go through any other protocol. It exists natively within the token itself.
Nice.
So,
very cool.
Just to explain, basically XETH is a consequence of FETH being a stable asset. Meaning, if you have, let's say, if you take again, if you take 10% increase of ETH, FETH will increase only by 1%. So the 9 remaining percent, which exists, which is real value, needs to go somewhere, and it goes to XETH, basically.
Okay. All right. Cool. That makes sense. And then I guess the only other question I have kind of from what you've talked about currently is, right, the users are earning the staked ETH. Where are the earnings coming from? Besides fees. I know you guys do have some fees.
Yeah, our fees are very minimal, mainly just to make certain that the liquidity pools for both FETH and XETH are match up with sort of uh, the the prices within the protocol. But basically, the yields, the staked ETH yields, come from the Lido staked ETH that's within the reserve that's been utilized to mint the tokens. So those yields. So if you were in, say, if you had minted some some tokens, some stable coins with any sort of LSD or whatever, your collateralized position would accumulate those rewards, right? Because they just go right back into the to your collateral position. Instead, those rewards go to our rebalancing pool. And so that's where that's coming from, is the collateral itself is generating those rewards, and it's going to this rebalancing pool, which you can kind of think of it like Liquidity's stability pool,
Hmm.
similarly. So yeah, it's similar to that.
Exactly. The main difference is that, if I remember, the stability pool from Liquidity is incentivized using their governance token. And I was just watching on the dashboard, the yield is about 2.5 APR, so it's not a lot, but still people are staking the LUSD. And why they are doing that? Because this is a strategy that anyone can use to buy basically cheap ETH. If you remember back, I think that was I don't know if it was FTX crash or Luna crash, but Tetranode got some staking, some LUSD staked on the stability pool on Liquidity, and during the red week of ETH, basically that triggers a lot of liquidation, and we have the same mechanism, meaning that you take the staked stable assets from the stability pool or rebalancing pool that are basically buying back all the liquidity, the collateral on which their position are, let's say, on being liquidated. And you can, in that way, you can buy basically the local bottom of ETH. So that's why I think people are as well incentivized to keep their asset staked into the rebalancing pool for FX, because at one time, and we know the crypto market is very volatile, you are going to get some cheap ETH on the very, let's say, strong drop down of price action of this.
Yeah, and it's even better than that, because you're not earning just ETH, you're earning actually like staked ETH. So you're actually earning like increasing value of ETH within your stable coins that are staked within the rebalancing pool. And so it's very it's a very capital efficient method for minting stable coins, because the amount of ETH that you put into the system, you can mint almost an identical amount of stable coins from it, the FETH, stable coin like product. And the minting fee, I believe, is like a quarter of a percent. I don't have it in front of me, but it's extremely low. And so it would be the most capital efficient decentralized stable coin on the market, additionally, the ability to earn those staked ETH rewards is just sort of like icing on the cake. So it'll be real interesting to see sort of the use cases and how well it gets adopted into the space, especially early on when the LSD staking yields in the rebalancing pool will be pretty large, relatively speaking. And so I'll be interested to see how well it gets adopted and how people start to utilize it within the ecosystem. But, the LSD staking yields also sort of help offset some of the, any sort of like downside volatility that FETH might get exposed to. As Subli was saying, it gets 10% of the price exposure of native ETH. And so, as it goes down and slightly in value or relative to its starting point, which with both, by the way, both tokens start at $1 at Genesis. So probably should mention that. So just for reference, so they both start at $1, and then they'll just sort of like wander around based on for FETH based on the price of ETH, and then for XETH, its value will fluctuate based on its relative ratio within the protocol to FETH itself. So just a few things to keep in mind as we keep discussing the protocol. But yeah, it's very unique in those regards. And so the protocol itself, it doesn't make a whole lot of money from the minting fees, or redemption fees, but it basically makes it from the management of the collateral itself. And so, like, the FX itself will have a native token, which is the FX token, and by people locking that up for up to 4 years, it's a VE tokenomics, very similar to Curve. By locking that up for 4 years, you'll have an opportunity to earn a portion of those staking yields that the collateral and the generates. And so that'll be interesting too. Is if you're a VE token holder, you'll be able to basically earn staked ETH. And so for our genesis, our launch on mainnet, we're starting off with Lido's staked ETH, but eventually the protocol is flexible enough to where will any sort of LSD that has a large enough liquidity on mainnet and is incentivizing it and has essentially been battle tested. Lido's staked ETH has been the most battle tested. I think of any staking product that it definitely serves the needs to be able to, if the rebalancing pool, if it has to be liquidated for whatever reason to satisfy the staked ETH, then it should never be a problem. But that's sort of it. And so you don't want to the staked ETH is fantastic because it allows you a lot of upside on the protocol. Eventually Frax ETH will get incorporated, and any other LSDs that come around that just are highly incentivized and generate very deep liquidity will also be considered as well. And it can also be expanded as well to other tokens as well. It doesn't have to be limited to just ETH. Eventually it could be a form of WBTC, because you could have FBTC and XBTC. So you would have a leveraged exposed position to Bitcoin, or it could be whatever, CRV or something like that. So lots of opportunities, very flexible protocol, and it's something that we're pretty excited to have right now. And like I said, it's on testnet. In fact, we just launched our testnet with LSDs today, and people are welcome to go and try it out. Visit our Discord if you're interested, and give us a shout, because we can hook you up with some testnet ETH, because it's on Falcon testnet. But yeah.
Yeah, exactly. This is important to say for people who were using the previous testnet on, let's say, if we can call it FXV1, that was running on Sepolia. Now, so we changed the testnet because we need support from stake ETH. So this is what you said. It's Falcon testnet. So if you go on the FX protocol Twitter account, I think that was yesterday night, we just released just a step-by-step on how to access the new testnet with the staked ETH. So go there, test the new FXV2, and there is as well a form if you want to report any feedback, whether they are positive or, let's say, for improvements. We are really looking forward to get some feedback from you guys.
Yeah, fantastic. Yeah, it's also in the Discord as well. Just a couple announcements up under the FX protocol tabs, guys, if you want to check that out. All right, so another question I have, right? So there's a lot of community feedback that you guys ended up moving to LSDs for reserve collateral, and it's kind of mentioned in there that you might eventually go to kind of native ETH by itself as an asset. What would kind of be the factors for using native non-staked ETH to kind of say as collateral reserve, or and what are just the overall benefits of using that you guys found of utilizing LSDs versus utilizing ETH as the main collateral?
It's an awesome question because actually FX Protocol V1 was based on ETH only, not staked ETH, and it was a project decision, a team decision to do that. The main benefit was that ETH is fully decentralized asset. That's the first thing, where LSD brings a little bit more of, let's say, not centralization, but you have a kind of smart contract risk inside of it. But the main benefit is that on V1, the safety module, because we didn't have the rebalancing pool, the safety module was a bit more complex. We had 3 stages of liquidation, so it was called the stability modules in 3 steps, basically. And getting staked ETH on FX for the V2 brought a lot of benefit. First of all, we could expect, I don't know if people have seen the June dashboard about staked ETH. In 3 months, we got 25% more ETH staked on Ethereum mainnet, which is huge. Staking was live back in 2020. So from 2020 to April 2023, so almost 3 years or 3 years and a half, there were approximately 18 million ETH staked. From the last 3 months, we went from 18 to 23 million. So 5 million is staked. So not $1 million. I'm talking about number of tokens. So it's huge. So we could expect in the coming years that ETH will be replaced naturally by staked ETH. Different type of assets, of course, could be Rocket, could be Lido, could be whatever. But if we could see already a lot of people taking that move, and I think that was as well one of the main decisions to the team is that we are building something that can be used for the coming 10 years. So what user will get in 10 years? Most likely they will buy staked ETH because you have a natural yield on top of it. So that was the main idea, and the underlying consequence is that the safety module on how to make the protocol safe is basically much easier thanks to the rebalancing pool, which is self-incentivized by the staking yield of staked ETH.
Yeah, I'll piggyback on that as well, Subli. That was a fabulous description, sir. Well done. I like to compare sort of like the use of native ETH to an LSD is sort of like if it, for the protocol, like you were saying in V1, it was just native ETH. And you can, the analogy I like to use for it, and I'll probably write an article here in the near future usually using this analogy, is I like to look at protocol FX as like a space station. And with native ETH, the space station was powered by solar panels, right? And it's basically all about like the price of ETH. And so it's like the more light, the brighter it gets, the higher the price goes, the better the protocol performs. And as things get darker, as solar panels get knocked out or whatever, broken or age out, then it gets dimmer and it gets lower, lighter. And so you had to have all these like step back and scale backs for sort of like the stability mechanisms within the protocol. And that's fine. It works, right? It's solar powered. It's fine. With an LSD, you are basically utilizing nuclear fuel, because it basically is just it's this native element that's just emitting energy. And so with this LSD, because it's just natively emitting this energy, which would be LSD staking yields, you can take that excess energy and you can put it into this battery, which is like the rebalancing pool. And so if the price of ETH drops, as you go through sort of that dark spot in the galaxy or whatever, you can draw on this energy from this battery, this rebalancing pool, and power up and keep the protocol powered up and all systems functioning fine. So I think utilizing LSDs, like Subli was saying, it's basically going to become ubiquitous in DeFi. Utilizing native ETH is fantastic. LUSD, their product is it's absolutely stellar, and it's definitely sort of a protocol that we look to as sort of like the pinnacle of sort of a decentralized stablecoin. But that comes with those caveats, right? Of it being expensive and You don't get the benefit of sort of like that yield from the LSD. And by taking on LSDs, you are taking on that little bit of existential risk. I think we're all familiar with sort of like Lido's existential, you can call it a threat to Ethereum, because of them taking up something like 33% of all staking in the consensus mechanism. But that just sort of speaks to like well, that's just always going to be a pervasive risk for any protocol on Ethereum, period. And so it's an endogenous risk to take on versus an exogenous risk, which if you're utilizing stablecoins, which would be something like USDC, where they have you are sort of at the whimsy of whatever the United States federal government monetary policy is, or banking collapses, or interest rate hikes, and how that's going to affect the treasury reserves of Tether or USDC or whatever other sort of real world asset that's taken on by these stablecoin providers that are engaging in sort of these opportunities that are outside the Ethereum ecosystem. So that's sort of the thought process with utilizing staked ETH and LSDs in general. And so it seems to have been like a very simplifying process, and once we kind of like walked up through the design of the protocol, it made a lot of sense, and I think you'll see it pervasive throughout DeFi in the future.
Yeah, very cool. Great explanation. Appreciate that. All right, so and then with minting the stablecoin, right? So obviously this is meant to be used as a stablecoin, always equals the value of $1. Are people going to be able to like deposit this, right? Say just like in any kind of lending market, are they going to be able to deposit it and borrow against it? And if so, what lending markets are going to be available for that, or is that going to also be available in FX protocol itself?
Yeah, I don't think people would really want to like borrow against stablecoin for the most part, but it's our expectation that these will be pervasive throughout DeFi in general. XETH, people might want to utilize that for some sort of trading position. I personally think it would be great for something like an options protocol or something like that. But we will definitely have like liquidity pools on Curve for both FETH and XETH and FX as the token itself. So our intention is that these get utilized just about everywhere you can imagine in DeFi, and but ironically, one of the best opportunities will probably be within the protocol itself, where you can basically take your FETH and stake it in the rebalancing pool and get the staked ETH earnings right there. So it'll be interesting to see how it grows and how it gets utilized. It's kind of up to the DeFi community as to where it goes and how it gets incorporated into things. But we have really big expectations, and we're kind of excited to see where it goes and how people incorporate it into their investing portfolios.
Yeah, my apologies on that. Not borrow against the stable coin. What I meant to ask was if they'll be able to borrow this stable coin from like a lending market outside of FX protocol, outside of minting it.
Yeah, I mean, this is the whole idea of creating usage about FX, of course. Because composability in DeFi is now a normal thing, especially for people, for institutions, or for people who have a certain amount of capital who want to do leverage. If you want to do leverage, I mean, you want, let's say, just swap your FETH against stake ETH and do the loop, make a looping. So this is the whole idea, not only of FX basically, but on all the projects about that are incubated as in DAO, is to create usage of the different assets. And of course, we are already in discussion with, let's say, the Curve ecosystem, but as well some money market to try to find a way for people to use their FETH on other protocols. So it's part of the roadmap, yes. There's no timeline. First, I mean, we are really focused on, as Kemet said, testnet is now live, but we are really focused on moving to mainnet, finalizing the second round of the initial token offering, the second round of IDO, and then we are going to launch liquidity pools, which will be incentivized. So there are a few steps that we need to go first, trying to, let's say, capture as much as feedback from the community, trying to attract TVL, trying to see how everything is working and how, if, let's say, our expectations are really matching user expectations. And after that, we will, since we have deep collections in DeFi, I'm pretty sure that we will find a way to get FETH on different money markets.
Nice, very cool. Very cool. Yeah, looking forward to kind of seeing how that plays out and the adoption, of this as it grows. All right, so kind of back to the protocol specifics. I know we wanted to talk about the stability mode and the rebalancing mechanisms, right? For how the project maintains its collateral ratio, and then the rebalancing mechanisms if it gets under that 130 or over that 130%.
Yeah, so the protocol has, if it's above 130%, collateral ratio versus, the LSD ratio to FETH, if it's above 130%, the protocol just operates normally. But once it goes below 130%, that's where the stability mode gets enacted. And so what that means is that FETH minting is shut off. You can't mint any more FETH, the stable coin, but you can redeem as much as you like back into staked ETH. And then additionally with XETH, you can mint as much XETH as you want, but you can't. Redemption of it is it's either, I can't recall off the top of my head, it's either not allowed or it's very expensive. It's one of the two. But additionally, on top of that, the rebalancing pool, so when you take FETH tokens under normal conditions and you stake them in the rebalancing pool, you are locking them up for about 2 weeks. And so after 2 weeks, you can relock them as much as you want, but they're locked in there, and you're collecting those LSD staking yields. And those LSD staking yields are yours. You can collect them. You can claim them whenever you want and utilize them however. But if an event occurs that basically engages the 130% collateral ratio issue, then we will then launch a batch of the LSD yields back through the reserve and into staked ETH. Basically, it runs backwards. It basically redeems FETH for staked ETH. And so you as a user, if you had been staking your FETH, you would lose a portion of your FETH in order to get the protocol back above 130. But you'll still keep your LSD staking yields. And so that's sort of the risk you take on with staking your FETH in the rebalancing pool. But those are really sort of the two main mechanisms. If things ever got like really bad, the protocol does have the opportunity to do what's called recapitalization. We kind of internally we call this kind of like the end of the world scenario. If the recapitalization, which is basically we just mint FX tokens, sell them on the market for staked ETH to basically prop up the reserve. That would be, if that was to occur, it would be lights out for basically the global economy as it stands. But the stability mechanisms and the rebalancing pool are robust enough on themselves that through our own modeling that we've done, to even engage with like the 130% collateral ratio, to even engage in stability mode, it would take a price movement of something like a 25% drop in ETH in one day. So it was pretty substantial, but that's sort of how robust these mechanisms are for keeping the FETH safe and holding value.
Yeah, very cool. All right. Well, I think for the most part, that kind of covers the protocol specifics in relation to FETH, XETH, how it works, rebalancing, reserves and all that. Is there anything, I definitely want to talk about like the token sale and everything that you guys have coming up on the roadmap. Is there anything else you want to cover within the protocol specifics itself?
My KMS, I think we're gonna we can talk about the second round of token sale maybe.
Yeah, go for it.
Yeah. So as said, so the first round of token sale, we got. Tell me if I'm wrong about the number, KMS. I think that was 60% of the total, let's say, allocation for public sale that was sold in about 70 seconds.
Yeah.
70 sec on round one. So it was, let's say, we clearly didn't expect that, even though, let's say, we did communicate a bit on it. But, I mean, we don't know if it's about speculation, if someone has done their homework, whatever. But the second round will happen after mainnet launch. How can I say that? The eligibility criteria to access it is still not yet known. So we will, I think, we will explain a bit more when time comes to announce round two. What else about that? For the people who are likely to read the white paper, the second version of the white paper has been published on our GitHub, so you can go on FX Protocol Twitter account and you will find the link over there. You can as well jump on our Discord if you want to ask any questions to the team. I mean, the team, KMets, especially the team in KMets, I'm a bit less available than them. They are really focusing on answering all questions from the community. And there is no stupid question. It can be a retail user up to, let's say, DeFi OG who are navigating DeFi since, let's say, maybe 7 years. So and enhance the marketing team of Aladdin DAO as a Twitter account. So make sure that you connect and you follow this account. Every month we release a newsletter about all the news from Aladdin DAO project. So there are, as a reminder, there are 3 projects. You have a concentrator, which is a yield optimizer built on top of convex finance. You have a Clever, which is basically, as of today, the main usage of Clever is to take a leverage position on CVX, so governance token of convex without the risk of liquidation. And of course, now we have FX protocol. I think this is what I wanted to cover, so that the community, let's say, and again, the best way to learn and understand how things are working, and let's say, because we don't want you to put all your eggs in one project. We have seen that on Rodeo Finance. It could be great, but you never know what happens. Even if let's say the project has been audited, even if we run all kind of tests, you never know. So the best way to learn and trust a project and trust the team behind it is just to stick to the team, stick to the community, and just share with us. This is what we've done with KMet since 1 year, and look where we are now. We are part of the team members, and we are putting our funds on the project as well as a user. So yeah, that's everything I wanted to say.
Yeah, just to kind of follow up there on sort of the kind of the next steps for FX protocol, and great job there, Subli. That was a great summary. Right now we are in testnet, like he was saying, on Falcon testnet, and if folks would like to get some some testnet tokens, some ETH, staked ETH, reach out to us on Discord, and we'll get you hooked up with the link for that. And it's also, I believe it's on the Protocol FX Twitter site. There is just a short application. You basically just send us your address, and we'll get you hooked up. But that's going to be going on for probably the next 2 weeks or so. Really just trying to get a lot of feedback from folks, any sort of little, I's that need to be dotted or T's that need to be crossed or what have you, swap some P's for some Q's and whatnot. We're just trying to get those things knocked out. And so once testnet's over with, we'll probably, or as it's ongoing, we'll probably knock some of those things out as well, just to make sure it's very polished. It operates exactly as expected. Everything's very clear for folks, and we want to get as much feedback as possible. And then so once that time period is up, we will then look at launching on mainnet as in what we call beta format. And so beta format basically just means you'll be able to mint and redeem. You'll be able to utilize the rebalance pool. But the one thing you won't be able to do immediately will be access liquidity pools on Curve, which is where we'll likely have most of our liquidity. So but we encourage people to come join the Discord, the Aladdin Discord, and come find me and Subli and everybody else on the team and the entire community, and ask as much questions and participate, and get on our all the Twitter accounts. You can get to all of them from the A-Team's Twitter account, and to get to Concentrator and Clever and Aladdin itself. And like Subli was saying, just ask as much as questions as you want. We want people to be involved. We want them to feel like that this is something that they feel they're comfortable using, and that they understand it. And so that's the whole point of us being here. And it's going to be great, man. We're very excited. The team as a whole. Like I said, we have very big ambitions, and we want this to be the absolute best DeFi product it possibly can be, and we can't do it without everybody helping us out.
And if I have 1 minute to add something, is that after 2 years following different projects, there is one thing that is it's still following the same path. You can build the best project on Earth, but if you have no connection, you won't succeed. And Charlene, the founder of Aladdin DAO and all the project, she is really, really smart. And basically, you should not underestimate the connection Aladdin DAO has with the whole Curve ecosystem. And the Curve ecosystem, once you're inside, you understand that it's a big family, really. And everybody has, of course, its own objectives, but we understand DeFi, how it's working, and we know that the DeFi Lego is something really important. And Aladdin DAO has deep connection with every project on the Curve ecosystem, and you will probably see that when FX protocol will be live on mainnet.
All right, fantastic. Yeah, I'm definitely looking forward to launching mainnet and hearing about the progress of testnet and everything that you guys are working on. Also, just so everyone's aware, if you want to, I posted the updated white paper in the comments section for quick access, so you can check it out. But yeah, hey guys, I really appreciate your time today, and deep diving into the protocol. Super excited to see this play out for you guys and see what you guys are able to do with it. So I really appreciate your time.
Thanks for having us.
Thanks a lot for hosting us. Yeah, amazing show as always. Thanks a lot, and congratulations again for the family growing, and good luck for your very short night coming.
Yeah.
Yeah.
Good luck. Congratulations.
I know what it is.
Yeah, I appreciate it. Yeah, I had quite a few of those already. So, yeah. Unfortunately, I'm back at work, not at home for the next couple of months. So it's all my wife doing it right now. But I'm definitely looking forward to getting back and being sleepless. Totally worth it.
All right.
Thank you so much.
Thanks again.
All right, guys. Yeah, thanks so much, and we'll chat soon about, we'll get a follow-up after you guys get mainnet up and check on the progress and all that. So I look forward to that as well. So, yeah, appreciate your time, guys. Have a great night.
Fantastic. Thank you.
Yeah, you too. Bye-bye.
All right. Thanks so much for tuning in, everybody. Really appreciate your time and support. Couldn't do this without you. Sorry, I had a stutter there. Once again, I'm Relentless from DeFi Raiders. We'll see you next time.